Hello guys, Agnos Crypto here. Today we're going to talk about what is happening with the market on these last days. As you may know, Bitcoin is the market driver on the cryptocurrencies universe because the price of almost every altcoin highly depends on the Bitcoin behavior, and that's a very good reason to be checking on it independently of what's the crypto you are investing on. The market has been stabilizing on the last days on the $8,000 mark. Last week, Bitcoin plunged below $6,000 for the first time since November, with all the bears predicting its final drop to the 5,000 levels. That didn't happen, of course, and the Bitcoin price reversed its direction through a fast recovery, hitting the $8,000 mark. And despite some few dips below that level, the truth is the cryptocurrency has stabilized over $8,000 the last days. Apparently, the market has shaken out a large percentage of the weak hands who contributed to its recent decline. According with news media, Bitcoin price has been bolstered in recent weeks by the return of moderate premiums at South Korean exchanges, where we have seen an increment of trading activity. For 3 straight days, the cryptocurrency market has continued to demonstrate signs of short-term recovery. Although volumes remain low, the price of most major cryptocurrencies like Bitcoin, Ethereum, Ripple, and Bitcoin Cash remain relatively high. Earlier on February 13, Bitcoin surpassed the $9,000 mark for the first time since February 10. While Bitcoin has not been able to recover beyond $10,000 mark, which many analysts consider as the psychological threshold, Bitcoin has recorded an optimistic weekly performance. Bitcoin and other major cryptocurrencies are in an ideal position to record new gains in the upcoming days, but the volumes of major cryptocurrencies must hold up. There exists optimism surrounding the short-term performance of Bitcoin and other major cryptocurrencies, given the enthusiasm of investors in the traditional finance market. Even though Bitcoin and cryptocurrencies as new asset class has been introduced to the traditional finance market in the form of futures, the truth is the majority of institutional investors remain uninvested in this asset class. In other positive news, this week JP Morgan, one of the largest banks in the world with a $380 billion market valuation, noted in a cryptocurrency paper that Bitcoin and other cryptocurrencies will have an important role in diversifying one's global bond and equity portfolio. The JP Morgan report on the cryptocurrency market delved into the correlation between technical developments and price of cryptocurrencies, and explained that minimizing risk in cryptocurrency investment by diversifying assets is crucial. Exposure of investors in the traditional finance market to the cryptocurrency sector through reports like JP Morgan's Bitcoin Bible and introduction of markets such as Bitcoin futures and exchange-traded funds, aka ETFs, could lead the price of Bitcoin to increase in the midterm. Another promising news was that Pantera Capital founder Dan Morehead predicted that the bear market, which he accurately forecast in mid-December, was preparing to turn a corner. As you can see, we have several good news for the crypto investments, which shed a positive light on the market potential trend. But we have to be cautious, taking into account that many traders think this apparent bull trend is in reality a bull trap, and that we could see further drops below the $7,000 mark on the next days. For instance, we know Bitcoin's previous bear cycles had an average duration of 71 days. At this moment, the market is 58 days into the present correction, and there is no reason to expect this one will be substantially different. According to Dan Morehead, it seems like another couple of weeks and everything will be normal, and Bitcoin can start growing back up again. He concluded, adding that he expects more institutional investors to begin entering the markets during the next bullish wave. Now, summarizing all this information, we can safely say there are many positive factors which indicate the bear market is about to finish, But at the same time, we have to be prudent, because even though this positive trend looks strong, the market could still give us a surprise in the next 2 weeks. Especially because we have not reached the Bitcoin bear market average duration of 71 days. And also because despite the positive indicators, most technical analysis still see the probability of a last dip below the $7,000 mark. If you have seen my past videos, you will remember that I've been expecting for a final drop between the $5,000 and $4,000 mark. I am actually still waiting for that to happen. It's not my intention to allocate more money on the market, at least for the next 3 weeks, until the shadow of the bear market average duration of 71 days have vanished. As usual, I hope you enjoyed this video. Just a reminder, this is not financial advice, this channel is just for information and entertainment purposes. I would like to know your opinion on what do you think will be the next market trend, and what's your price target at the end of 2018? If you want to share your thoughts, leave a comment below. And also, if you like the content, don't forget to give thumbs up and hit the subscribe button. See you guys soon on the next video.